using the same indicator, okay, but the opposite side. It's as simple as that. Using the same thing, but the opposite. Um, what most people have no idea concept about is that, especially when the market is already dropping, okay, when the market is dropping and everybody's scared, the VIX spikes up. So, in the previous video that I used to have on the VIX, what I would tell people is say, hey, look for the VIX to touch this top. And I still stand by that, by the way. Okay, when the VIX makes it to the top, when it touches that top, oh my gosh, like whenever the VIX touches that top, let me make that very clear. Whenever the VIX touches that top, you know the bottom is almost near, without question. Okay, if you're questioning whether the S&P, the VIX is the opposite. Okay, it's the inverse, so to speak. Whenever the VIX touches the top, this top line right here, all I'm telling you right now is count the days. Start counting the days. You know this market is getting ready to reverse. Pure and simple. Okay. This is why, if you saw in the testimony that I showed you, an email that came in from a gentleman named Dan, that's the same thing that he saw. He said, wait a second. If I'm understanding this correctly, the VIX has already touched the top. We should be expecting a reversal to the downside pretty soon. Do you guys recall when he actually sent this? I believe he sent that email on the 26th, December 26th, I believe is when he sent the message. Where is December 26th? Here is December 24th. Here's December 26th right here. So on this red candle, if you guys go, for those of you guys who probably saw the testimony that I put up when I was showing you guys about the promotional, or not the promotion, but the free version that I did on Saturday, this is what he saw. He said, wait a second, if I understand you correctly, then the VIX is getting ready to go down. If the VIX is getting ready to go down, that means that the market is getting ready to go up. And I told him, I said, you are absolutely correct. You guys recall that? Okay. The reason why was because what we talk about is when the VIX gets to the top, and especially after it gets to the top, the green crosses back below red. Okay, you remember that, D Park? Thank you. Thank you for remembering that. I figured, I said, I know I covered that. It's like nobody was saying. Does anybody else recall me showing that information? Okay, thank you. Okay, I thought I was just talking to myself here for a second. Great. So what he was referring to was simply this. It's like, wait a second, when the VIX is at the top, and now the green is beginning to cross below the red. And when I say top, all he has to do sometimes is just even touch it. I mean, sometimes it doesn't even have to, you just have to come close enough. All right. But then now the green crosses back below the red. We're in for the VIX to drop and market to begin rallying. Okay. Please understand that. Whenever the VIX, the market is so scary, price goes all the way to the top. And especially if it touches that green line on the top, which is the I just call it the top. Okay. Once it gets up here, wait to see when it starts crossing over. Once it starts doing that, then we know fear is about to leave the market. And if fear is leaving the market, then that means money is about to flow into the market. I don't like to say institutions are buying because I don't know if it's them or not. I don't like to say the hedge funds are the ones buying it because I don't know if they are buying or not. But what I can say is money is beginning to flow into the market. I look at the VIX more than anything else as a fear gauge. That's it. It's a fear gauge. So if price comes up to this top, if the VIX comes up to the top, I know it's a matter of counting when that reversal is going to take place. It's literally just sitting back and just counting when is that reversal going to take place. So the question is, do you also look at the number the VIX is at, like a certain range above 18 or a certain number? No, I don't. I don't look at the number. I just look at the indicator. That's it. Okay. That's the first thing I look for is like, where is this? The closer it is to this top level, the better. I know the reversal is very near. Like the writing is on the wall. So that was the reason why, Mr. Isaac, when you saw me send that text message, as that email to you, and I said, hey, if I get confirmation on the market, I'm going long, was because I knew that this was already taking place, just like Dan did. Okay. So that's the first thing. Give me a why if you understand this. It's a very simple concept. I try not to make it complicated. Okay. Very simple concept. Mr. Isaac, you said, is the reverse the case for a reversal to the downward? No. So I'm gonna show you, and that's part of the new information I wanted to show you guys today. Okay, show you guys something here. Like I said, you guys are in for a treat. Okay, so that's the first thing, is understanding when the market is beginning to show us signs that we're at the bottom. So so I want you guys to start thinking about it this way. I'm looking at the stochastic on the daily chart on the S&P. Now, this applies to the major markets, not necessarily to individual stocks. So please understand that. So, because the VIX relates to the S&P 500, not to Apple or Netflix or anything like that. Okay. Walter said, you no longer use the Stoke 8317.1. I'm not sure what you mean by that. 8317.1 on the low to pick bottoms. What do you mean by that? Can't wait for Walter to respond back. Okay. So what we're looking for here. So from the class that you took, these were the settings that I gave you. Let me double check that. I don't believe it was for the stochastic. Let me double check that with you. Okay. Email me and let me know, because not for the VIX. Okay, not for the VIX. So it might be for something else, but not for the VIX. But let me just double check that, because I don't recall those numbers per se. Okay. All right. So what am I saying here? So now that we know that the VIX is at the top, we can start expecting price to come down. So what I want you guys to be thinking about is when this S&P is at the bottom of stochastic, I want you guys to come over to the VIX and say, where is the VIX in relation to all this? Because if the VIX is at the top, okay, if the VIX is at the top, then chances are getting higher that we'll have that bottom. Make sense? Chances are higher if the stochastic is at the bottom on the S&P 500 and you come to the VIX and the VIX is now at the top, we have a very high probability that the bottom has been set. Okay. And you don't see that too often again. But when that happens, you want to pay very close attention to it. Make sense? The next thing, now here's where some of this new information comes in. The next thing is, before I just focused on the indicator. Now I'm beginning to focus on the candlesticks as well. And what I notice is that almost always after it gets to that top, you will find some type of long wick at the top. Okay. Once you start seeing these long wicks, okay, those are usually signs that that reversal is about to take place. Once you start seeing those, so that's something that I pay very close attention to now. Whereas before I wasn't paying attention to that. But once I start seeing these long wicks at the top, I said, oh my goodness, okay, this reversal is getting closer and closer and closer and closer. So if you look right here on this one, we didn't get that long wick at the top. But what happened the very next day? We started seeing that long wick again. Once you start seeing those long wicks, it's almost inevitable that VIX starts turning downwards and the market has hit bottom, getting ready to go higher. Make sense? Okay, so now once you understand that, so somebody asked the question, do you use this VIX setup to help you decide when to go? Absolutely, I use this VIX to help me decide when I want to go long, without a question. Without a question. Okay. I use this to help me decide when I want to go long. Okay. Especially, again, especially when you start seeing it making it back to the top. Okay. When the VIX starts making it back to the top, to not pay attention to that is giving away golden opportunities. Make sense? And this is that slow and steady right there. This is that slow and steady. Now, if you notice, it doesn't always make it to the top. So sometimes I don't mind getting in when I see that it's close enough to the top. Anything over 60, 65, I'm okay with that. Okay. So something like this, maybe even this one. This one I probably would not be so interested in. This one I definitely won't be interested in that one. But this for sure, this one would definitely be there. This one, questionable. These right here, nah, not necessarily interested in those. Okay. Makes sense? But the closer they are to the top, the more excited I am. And then if I start seeing those wicks at the top, those long wicks at the top, once those long wicks starts appearing, then I know, yes, we are within days of the reversal taking place. Okay, we're within days of the reversal taking place. Make sense? All right. Now, one more thing, and this is totally new. I'm going to show you guys, and then we'll wrap it up. Is well, actually, before I go there, I see a comment says there was a divergence on the stock in October, November with the wicks of those same months. This right here. Yes. Now, I don't look at divergence on this. I know what you're talking about. We're looking at this right here and saying this right here. No, that's not what I use it for. By all means, if you want to research that and see whether that adds to it, no problem with that. Okay. But I don't necessarily focus on divergence. Again, the biggest thing I do is how close are we to the top to kind of tell me whether this is really a bottom that we beginning to put in. And I want to see whether or not I have some long wicks taking place. Okay. The other side is kind of like what Mr. Isaac mentioned, which is, I believe he was asking, what's the reversal? How can you tell when we are at the top of a market and it's ready to come down? Okay. So for that, you have to do something slightly different. Okay. What you have to do is now go here, and I want you to do is change this to 27, change this one to 10. And what I want you guys to do is change this to Wilders. Okay. Now, picking the top is not as easy as picking the bottom. Okay. And I think that happens for various reasons. Part of it is, I believe, the market trends higher. Market stays in a bullish condition longer than it does a bearish condition, pure and simple. Okay. So it's harder. Like, it's easier for the market to drop and then bounce back up, as opposed to like it rallies and it drops back down again. It can rally and kind of stay there and just linger and linger as it goes higher and higher and higher. Whereas with a drop, it's very common to see it drop and then bounce back. Like, that's why they call it a dead cat bounce. Okay. It just drops and bounces right back up. Bounces right back up. When it goes up, it can literally just keep on going higher or kind of stall or slow down in momentum and just keep on gradually going higher. So it's a little harder to pick the tops than it is the bottoms. Okay. However, this is the closest that I've come to find as far as like identifying the tops. And what it is very simple. When the green crosses back above red, you will see that volatility spikes. When green crosses above red, doesn't happen all the time, volatility spikes. When green crosses above red, volatility spikes. When green crosses above red, volatility spikes. Those spike in volatility is basically the drops that we see in the market. Even this right here, volatility spikes. You guys see that? So when the VIX, if you're looking to see, so right now, as much as I want the market to put in a top, when I come over here and I see how far away these are from each other, I'm like, okay, as much as I want a drop to take place, this is not happening anytime soon. Pure and simple. Make sense? It's not happening anytime soon. As much as I want this market to drop and go down the drain, so to speak, I can look at this and say, okay, don't get your hopes up high. But if we were to have this green cross back above red, when everybody might still be sitting down there wondering, when did the drop really start taking place this year, this quarter? Wasn't it in October, beginning of October? Look at that. That was that initial drop. Then we had a major drop again in December, correct? Look at that. Okay. If you had known these information, these are things that would have helped you with your trading. I know people that made so much money all year long and lost it all by October. Like literally, 9 months of profits, poof, gone in the month of October. By December, they were upside down. Okay. Don't let that be you, please. There's a lot to this. Again, what indicators did I use? Stochastic. So when somebody comes to me, hopefully you guys can see now, when somebody comes to me and say, oh, stochastic is a lagging indicator. Yes, it is lagging indicator. I don't expect it to lead price, but you're using it incorrectly. It's not supposed to do anything but just give you an idea of what's going on. Even if it's lagging by 2 days and you get out of that trade in 2 days. Okay, again, the key is not, oh, I'm so happy because I'm making money. I'm so depressed because I lost money. I'm telling you right now, if that's the way you are, then there's a lot of improvement that needs to be made as a trader, because it doesn't matter what your strategy is, you will lose focus like the rabbit is losing focus, and you won't win this race. The key is to be excited that you have a system that can get you into the trade more often with a profit than not. And even when it gets you out, be excited about that, because you say, hey, my system got me out of that trade before it became too bad, before it became too dangerous. Make sense? And that's as simple as it is. So that is what I wanted to show you guys. And what you guys have done for me, again, like I said, I do appreciate you guys being on the call, is you've allowed me to update some of my videos. Now, I would tell you this. I mean, this is just, the tip of the iceberg. There's a whole lot more. And I want to invite you. I'm going to be doing another video. And this is what I'm going to do. For those of you guys who want to take advantage, this is where I'm going to invite you guys to come join me. I believe on this Thursday coming up at 8 p.m. I'm actually going to be doing another video where I go into more details about using the stochastic indicators, but not necessarily just for tops and bottoms, but for other traded trades. So talking about breakouts. So right now we only talked about market bottoms. I'm going to be doing one on breakouts, and I'm also going to be doing one on divergence. Okay, so I think Deepak was the one that mentioned divergence earlier. I'm gonna show you how to use divergence. If you've ever known the power of divergence, now I'm gonna show you guys how to use this, with the stochastic indicator. Okay. So I want to invite you to that. Again, it's to help me put my new videos for 2019 together, because I'm going to be getting rid of all my old videos, and these are going to be the new ones that I would then be selling later on for even more. For that one, because it's going to be a little bit more in depth, you won't be able to get in for the cheap price of $67. This one, I want to invite you guys to this one. It's going to be $497. Okay. But I promise you, if anybody knows me from what I've done in the past, the people who join in early are the ones that get the best price, pure and simple. If you want this at the most discounted price you can get, this will be it. It'll be this Thursday night, 8 p.m., same as we're doing right now, but it will just start at 8 p.m. We'll go for like about a couple of hours. So it'll be like 8 p.m. Eastern time to 9. If you can't make it, the recording will be available just like this recording would be. Okay. And I highly encourage you guys to come join us then. Okay. So I know there's not enough time because I didn't give you guys heads up, but at least I would like to invite you guys to it. I'd like to see you guys on there. It's $497 for this Thursday, 8 p.m. Okay. If you want to sign up for it, all you have to do is just go to rightside-trading.com/497. Okay. Let me write that down. rightside-trading.com/497. That's the link if you want to sign up for that. 497. Excuse me.